American Bitcoin activates 11,000 BTC miners as shares. Keep climbing. American Bitcoin, the publicly traded mining and treasury company tied to Eric Trump and Donald Trump Jr., has activated 11,000 BTC mining machines, pushing up its owned hash rate at a moment when the stock is already on a tear. Decrypt reported the activation on April 22, 2026, with shares continuing to move higher into the news. The backdrop matters. As of April 22, 2026, Bitcoin trades at $79,090, up 3.83% in 24 hours and 6.27% over the past week, per CoinMarketCap. The broader market is in greed territory at 63 on the Fear and Greed Index. Mining economics improve every time BTC rallies into this zone, and American Bitcoin is timing an expansion into that window. What 11,000 activated miners actually change owned hash rate is different from hosted or leased capacity. When a public miner flips on 11,000 of its own rigs, that additional hash goes directly onto its balance sheet as revenue-producing equipment, not as a pass-through agreement. The company captures the full block reward share tied to that hash, minus power and overhead. At typical modern ASIC performance in the 200-300 terahash per second range per machine, 11,000 units is a meaningful step up, not a rounding error. The exact contribution depends on the rig model and site efficiency, but the activation is the kind of operational milestone that public miners usually telegraph to the market for weeks before flipping the switch. The share price response suggests investors read this as a credible capacity story, rather than a press release. BTC has been volatile since its public debut, but the stock has been trending up in the current BTC rally. The Trump backing is still the main narrative hook. American Bitcoin is not a generic miner. It sits inside a very specific political story, with Eric Trump and Donald Trump Jr. as public faces and Hut 8 as an operating partner. That backing is part of why the stock moves harder on any positive mining or treasury update than a same-size rival would. For the base case, the political connection attracts retail attention, speculative flows, and quote-tweet coverage that a pure industrial miner would struggle to get. For the bear case, the same attention draws regulatory scrutiny and political risk that competitors do not carry. Elizabeth Warren has already pushed for a Bitmain probe touching the American Bitcoin orbit, and that pressure is not going away. The market is effectively paying for both, the operational business and the headline machine around it. Mining economics at $79,000, public miners hit their best margins when Bitcoin is high and hash price, which measures revenue per unit of hash, is expanding. The current setup is favorable on both counts. BTC is up near $79,000, transaction fees have been steady, and difficulty has not absorbed the full upside yet. That window is when well-capitalized miners push the accelerator. Bringing 11,000 rigs online during a rally means American Bitcoin captures more BTC per day than the same machines would have produced at last quarter's lower price. If the company retains that BTC on its balance sheet, instead of selling, the treasury compounds on top of the price move. The flip side is well known. If BTC reverses and hash price compresses, the fixed costs of running those same 11,000 rigs do not shrink. Energy contracts and site costs keep running whether the price is $79,000 or $50,000. That is the lever that turned into a guillotine for miners in prior downturns. What to watch next? 3 things will decide whether today's share pop sticks. First, the next hash rate update from American Bitcoin itself, which should quantify exactly how much owned hash the activation adds. Second, the company's BTC accumulation disclosures, because the market is rewarding treasury growth at least as much as operational output. Third, the broader public miner tape, including Marathon, CleanSpark, and Riot, which will signal whether this rally is a sector move or a political premium on one specific name. For crypto users watching from outside the equity markets, the read-through is simpler. More owned hash on public balance sheets means more publicly reported BTC flowing through disclosed treasuries, which ultimately feeds the same accumulation story that ETFs and corporate treasuries have been telling since 2024.